August is seasonally a volatile time for the stock markets, and this August is appearing to be absolutely no different. Last week, Moody's kicked off the volatility by downgrading a number of different banks and putting a number of other banks on downgrade watch. As a result, the relief rally that we saw on Monday was flipped around on Tuesday after Moody's announcement came out. On Wednesday, China announced that they're experiencing deflation, as their consumer price index saw the first drop in more than 2 years. Deflation is actually worse than inflation, as consumers will stop spending money because they see prices dropping and they'll assume that they will continue to drop into the future. On Thursday, the US's CPI came out at 3.2% for July, which was less than the 3.3% expected. Now, any positive amount in the CPI means that we are still experiencing inflation, but because the rate of inflation is still decreasing, called disinflation, this was a positive news, so stocks actually rallied after they had that CPI report. On Friday, the producer price index came in, and instead of being cooler than expected, it actually came in hotter than expected, at 0.3% versus the 0.2% expected. So this mixed inflation report once again caused the markets to flip-flop, because now it looked like there would be more inflation problems than we may have previously thought. Next week has a number of different things coming out. First off, we get reports from the retailers, the big ones, Walmart, Home Depot, and Target. And this will show us whether or not consumer strength is still there or whether or not the consumer is weakening. If the consumer is weakening, this is not good news for the U.S. economy, and stocks will probably retreat based on that kind of approach. However, if it's good news, it might be the opposite. Internationally, the Bank of Japan may announce news next week to fight the decreasing value of the yen. Although the Japanese stock market had experienced a bit of a resurgence earlier in 2023, that's recently flipped around, with the U.S. dollar gaining value against the yen. So that puts the BOJ into a position where it might have to defend the yen. It's at a historically high rate compared against the dollar, and when it's reached this level before, the BOJ has taken action, which could cause all stock markets to sell off. Finally, GDP in Britain came in high this week, and that's not good for the Bank of England. Since the GDP is still hot, that means the economy needs to be cooled off, and that means the BOE will have to continue raising interest rates in the UK. Over in Bitcoin, we're still very much trading in this range, as you can see since the past week. On Monday, Bitcoin did pull back, but it actually found support above the weekly low, which is a bullish sign. Instead of testing our support at $28,575, Bitcoin found support at $28,672. And a higher low is bullish. What you want to see are higher highs and higher lows on a time frame over and over again. Continuing this trend, Bitcoin actually broke through our previous weekly high at $30,027. However, even though it did find a new high here at $30,187, you may remember that a few weeks ago I said that Bitcoin could continue to see resistance at $30,100, and this is exactly what's happening. Accordingly, I'm going to raise this point of resistance up here to $30,419. What I would really like to see is a break of that point, and that would make me a lot more bullish about the price action and that we're not just trading in a range. In the meantime, you can see that the parallel channels that we've been using for well over a month now continue to have influence over Bitcoin's price movement. On the bullish side, you can see this parallel channel was unable to provide the support that Bitcoin needs. And on the bearish side, you can see that Bitcoin is actually traveling down this parallel channel, finding support at it, but that is not bullish. It is bearish as it keeps making lower lows. The bulls believe that the SEC is going to come out with a positive announcement about the spot Bitcoin ETFs, and that this will cause more of a bull rally. However, with all the macroeconomic and geopolitical concerns that remain on the horizon, and the volatility that's in the stock market, bears don't think that Bitcoin is going to be bullish from here. They believe a sell-off is imminent, and that will break through not just $28,575, but potentially the $24,750 mark. Over in my investments in play portfolio, we continue to be in the middle of earnings season, and this week's winner was Dutch Bros, which rocketed 15.34% on the report of getting better revenue and earnings guidance than was previously expected. Dutch Bros is relatively new on the stock market, but it's been in the Pacific Northwest for years, and this company has proven that it really has the longevity necessary to be a really good long-term investment. It was a tale of two earnings reports this week when Roblox came out and disappointed. Not only did it have a bigger loss than analysts were expecting, the CFO decided not to give any forward financial guidance, and this was not good news for investors who dumped the stock. Roblox dropped 20.43% on the back of this bad earnings report, all in one day. And for right now, it looks like it could have more downside ahead as the market continues to be volatile. In my speculation in play portfolio, Yeti reported an excellent earnings report this week and ended up gaining 8.74%, coming in as the week's biggest winner on the back of great earnings and good forward guidance. This week's loser was Danimer Scientific, the manufacturers of biodegradable plastics that are used in the medical industry. Danimer continues to disappoint, and its earnings report was very bad, with bad forward guidance. And as a result, Danimer dropped 18.63% this week alone, and was easily the speculation in play portfolio's biggest loser. Thanks to volatility coming back to the stock market, some of the bigger high flyers are getting hit pretty hard. And that's what happened to Microsoft and a lot of the other AI stocks this week. Microsoft ended up triggering my next buy order, where I added 2.45% to my position at $325.08. And even though this was only a 6.24% discount on the shares that I sold on June 15th for $346.72, this was a very small add. I made a significant sale on that day, so it was time to just start putting some money into Microsoft, even though I think there's further downside ahead. Because my Microsoft position is relatively small, and I'm only currently playing with the house's money, this did raise my per share cost up 13.27% to negative $62.88. However, a negative per share cost means I have no money in this position, and instead, each of my shares adds $62.88 to the bottom line. And that's why it's going inverted every time I make a buy. It will go further and further closer to zero. My next buy target is down at $312.89, above a point of support Microsoft saw on its way up in 2023, and I believe it's going to hit that shortly. However, it's going to be another small buy. I'm putting money slowly into Microsoft, as I think we could see a more expansive sell-off. That being said, I have no additional sell targets for this position at this time. Since I've taken all the capital out, I'm in no hurry to take additional profits. This is a long-term investment, and I believe Microsoft's going to be excellent for the long term. Over the short term, we may see continued weakness, but this is an opportunity to add to positions, not to freak out. If you'd like to learn more about long-term investing and to follow along with each one of my moves in all of my portfolios, you can do so 100% free at my website, www.getirk.com. Thank you for watching. Please hit like and subscribe. It really does help the channel out. And I'll see you in the next video.